Hello everyone, I am Pushpita De and you are watching Zee Business. With just a few days left for the Union Budget 2023, all eyes are now on the same. Meanwhile, with the quarterly results of October-December quarter of FY23 coming out, the banks are showing quite a progress. Today we have with us the Chief Financial Officer and the Group President of Federal Bank, Mr. Venkatraman Venkateswaran, to talk about the kind of expectations we can have from the budget and what banks have to offer in the coming quarters. Without further delay, please welcome Mr. Venkateswaran Venkatraman.
Firstly, let me wish all the viewers a very happy new year because this is the first interaction in the calendar year.
Thank you so much, sir, for joining us. I have a couple of questions for you regarding the budget and the plans of the banks. So, my first question to you is how do you plan to address the issue of NPS yet keep the credit growth unaltered for the bank?
Loans and NPA, so what I can infer is this would largely be unsecured loans, which is personal loan, credit cards. These are the loans which, when the repayment doesn't happen, turns into an NPA based on certain parameters. There could be several reasons why the repayment gets impacted. It could be, like you said, unfortunate situations where some people lose their jobs, so they are unable to repay. But if you see again, that is where we as a bank stand out. It's the credit quality which matters a lot. We are known as a bank which is conservative, and we always say that nothing wrong in being conservative. By not taking undue risks, and we have a risk framework which is put in place, we try and minimize these kind of situations where there's a rising NPA situation on the unsecured loans. And number two, banks which have a very high exposure on the unsecured loan side may see these kind of developments, whereas for Federal, we've just begun a journey about a year plus on the unsecured, both cards and personal loans. And our delinquency rates have been under control. Even if there are some customers who have not been able to pay, there are only up to a certain point where we can do a follow-up. And beyond that, that's the nature of this business itself. The returns are high because the risk is high. So it's a risk-reward situation. And as long as we operate in a fair manner and we're able to ensure that the collection methodology adopted is fair, I'm sure, as an industry, we have evolved quite a bit, and RBI also has been very, very clear in terms of the guidelines which banks and financial institutions, NBFCs, have to follow in this regard. On the other side, speaking from the point of view of the borrower, I think it's very important for them also to acknowledge the fact that when they are taking an unsecured loan or any loan for that matter of fact, you need to be clear that there are certain obligations which they have to meet in terms of repayment, minimum repayment, and make sure that their cash flows are adequate enough to take care of future requirements. Yes, I can speak about, again, this is something which is off the record. Youngsters today take loans, personal loans, because of lifestyle requirement. They like to travel. It's more about spending on experiences. And after a couple of years of no travel, you can have seen the boom in travel, tourism, people flocking both within the country and outside. Nothing wrong in it. It's a personal choice which people make to spend on experiences, travel, and other things. But at the same time, just make sure that you exercise necessary caution and steps to repay the loans. That's how I look at it.
Got it, sir. So my next question to you is regarding the low inflation rate. With the inflation rate coming down, how do the bank decide the interest rates on the loans in the coming quarters?
Sure. I think we have seen data for a couple of data points very recently about inflation coming down, both CPI and yesterday WPI numbers also came out, which was aligned to what RBI had indicated, that the rates should start seeing some softening it's still not within the band which RBI has set for itself in terms of 2 to 4%. In our view, there could be one more rate hike which the RBI may consider in the February meet, possibly around 25 bips, and may then, based on data points, pause in terms of further hikes. But there is a lot happening around us. It's not just one indicator of inflation which is going to drive the results on interest rate hike or not. Inflation is one data point, and inflation, as we have seen, is not going to come down in a hurry. It will take some time for it to moderate and come to within the band which the Reserve Bank expects it. So they would want to see further indicators substantiating their view that the time has come for them to probably look at a reduction and all that. Second thing is, with the global uncertainty, commodity price like oil being still above $80, rupee current account deficit. So we have to look at all these factors. It's not just one. There are multiple airs in the ball in the air which the government and central bank are dealing with. So they are all linked. So you can't see just inflation in isolation. But I guess we have started seeing a bit of moderation in the US as well. So the commentary from the Fed last week was also on those lines, that there may be a smaller hike as compared to what they were indicating some time back. So we'll have to wait and watch. And also, what I've learned in this whole process, it's too difficult to predict for 1 year beyond and all that. I think we have to look at it probably 1 or 2 quarters and then be willing to adapt according to the data points.
So when we are talking about the interest rates, we can also focus on the FD rates going up. Like FDs have really provided a good interest rates in the last 1 year. So my next question is regarding that only. So with the interest rates going up on FDs, a lot more young individuals have started investing in FDs too. So how do you plan to incentivize the investment schemes for such youngsters in this coming quarter?
Sure. If you've seen that the deposit rates has been going up over the last 6-8 months, with the rate hikes, obviously the deposit rates have gone up. In the past, it was quite low, and it's only fair from a saver's point of view that the rates moved up, and the real rates, in my view, the real rates are still probably negative, not yet positive. So if you look at 2-year, most banks are around 7% now. It's just about close to breaking even on a real rate basis. So with the equity markets a bit subdued, there is this shift of money happening from savings to term deposits as the rates get better. Some amount of reallocation from equity to fixed income as well. It could be term deposits, it could be debt mutual funds. In our case, we have some very attractive rates on the fixed deposits. And you have seen our Q3 results. Our deposit grew 6% quarter on quarter, which is very, very good as compared to what we have seen in the industry. And our deposit growth on a year-on-year basis was 15%. So that augurs well from the bank's perspective as well, where we are able to offer reasonably good returns to people. And at the same time, with the credit growth being where it is, we are still confident of meeting our full year guidance of high teens, 18 to 20% growth. So we have to fund the growth as well. So the deposit growth helps us meet the credit growth as well. So we will see more money moving towards deposits in the near term. Till then, again, it's all when the rate cycle turns. So there'll be a view whether we should lock in for longer tenors. I think probably, in my view, this is the right time to lock in money where rates are attractive from a medium-term point of view, say 2 to 3 year perspective.
Just like the budget is around the corner and also inflation coming down, all eyes are on the budget as well. So with budget 2023 around the corner, what are your expectations from the ministry in this budget?
I think in my view, the first thing would be to ensure that there is stability and growth, which both the government and the Reserve Bank has been doing. if you have seen, it's been a very orderly kind of management of currency and inflation vis-a-vis what we have seen in the Western world. It's not disrupted the economy. We are still one of the fastest growing economies in the world. So first thing would be growth and stability. And when I say growth, right now, probably till recent past, the government investment in capex was driving most of the growth. So I think gradually we are now started seeing private capex pick up as well. Term loans, capacity utilizations now above 75%. There is investment in projects by private sector. It has started, but it has to really catch up, and there's still a lot of potential. So I think directionally, if the government can extend the PLI scheme to more sectors, that would help. And these in turn, the private sector investment and government capex would help in employment generation. It's a virtuous cycle which we will get into. So that's number one. The second thing which we would like to see is some alignment from the capital gains tax rates. If you see the tax rates for real estate, capital gains rate for real estate, gold, debt funds, equity funds are all very different for long term. One is 3 years for debt fund, for shares it's 1 year, it's different. So I think if we can align it and make sure that investments are made into an asset class based on how good it is, rather than what tax advantages an asset class gives. The tax should not be driving the investment. It should be like, yes, this is a worthwhile asset class to invest, and let's make sure that we get people's money invested in the right asset classes on the merits of it, and not just on taking a tax advantage arbitrage. So capital gains tax alignment, this is something which I believe, I'm hoping it would be addressed in this budget. And the last one which I would look at is, given the fact that we are a country which is still largely dependent on the rural economy. Yeah. Investment in healthcare and education should be promoted in a much, much bigger way. That's the fundamental foundation for growth in the future, education and infrastructure, especially healthcare. Yeah. So if you address these two, and through the investments address the employment, you start seeing the effects of all this kicking in over a period of time. None of these are short-term measures. They all need sustained investments, long-term investments, and that's where the government comes in, probably government, private sector partnership initiatives, something of that kind. So these would be my top three expectations from the budget.
Got that, sir. I just have one more question for you. And my last question for you is, we have seen that dollar index volatility has remained a concern for the last 1 year. And with millions of Indian students going abroad every year, they opt for the loans and the forex cards. How do you plan to keep your exchange rate competitive?
Sure. We have a very strong, compelling product proposition on education loans. And just by way of context, you should know that Federal Bank is the bank which gets nearly 22% of the inward remittances which comes into the country through the formal sector comes through Federal Bank. So it's channelized through us. And we have some very strong partnerships with exchange houses. So what that means is, gives us the ability to price very finely, and the margins are based more on volume than just individual transactions. And we pass on our rates, if you see, is very, very competitive in the market. And when education loans are taken, obviously we send the money directly to the institute where the student has got admission into. And it's an INR equivalent, and then it gets fixed, and then the repayment starts coming in after a period of time. There are terms agreed for the repayment. So we make sure that we are fair. We're not a bank which is going to make tons of money just by charging higher on student loan FX and all that. There are very competitive FX rates, which we believe is one of our biggest strengths, because we are a fairly NR franchise. Our customer base has a very large NR franchise who are regular remitters into the country, and we have a more than 22% share in inward remittances, which gives us the ability to manage the FX quite efficiently.
Mr. Venkateswaran gave us some insightful inputs on the banking sector and what can we expect from the coming budget. Let's wait and see to what extent can the finance ministry live up to the expectations of the masses and other financial players.